Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement with Chris Mcintire. McIntyre Retirement Services, Northwest Ohio's retirement planning resource.
Welcome into the program. This is your game plan for retirement. I am consumer advocate Peter Rashan, and I am joined, as always, here on the program by Northwestern Ohio's resource for a common sense approach to navigating the complex financial world, decomplicating it. He is Chris Mcintire, president and founder of McIntyre Retirement Services. And Chris, we always appreciate your guidance here on the program.
Peter, it's my pleasure to be with you this weekend, and I hope everybody's doing well out there.
Well, we are here, Chris, and I know that a lot of savers, investors, retirement-minded individuals across Northwestern Ohio are enjoying some of the hotter weather, but we're going to be talking about some of the hot topics in the financial world. And in getting going in that subject, we certainly couldn't ignore how hot the stock market has been and continues to be, Chris. This has been a decade-plus run in the market, and I know that while you there at McIntyre Retirement Services like to help your clients take advantage of that, you're also balancing risk and reward for every individual's specific risk tolerance. But what do we need to be paying attention to right now in the market?
Well, Peter, I think right now we still need to pay attention to the fact that over the summer months, we get a lot of volatility. We have not had a 10% correction in some time, and corrections are healthy for the stock market. The Federal Reserve has said that inflation is transitory, which means it's only occurring as our economy is opening up very quickly with the vaccines and, the drop in coronavirus cases and the return to whatever normal is going to be, has created a lot of supply chain issues like car dealerships, for example. I'm up here by the lake and, there's a car dealership a half mile from here. They got no cars to sell. Boats up here, there's nothing to buy. Everybody is certainly the demand is outpacing the supply, which causes prices to go up. That leads to inflation, and the hope is that is going to slow down here a little bit as the manufacturing processes catch up, I guess, if you will. So we are not coming out of a recession. We're doing an economic restart, and we've never really done anything quite like this before. So we're seeing some of the blips in the system, but inflation is probably one of the key points here that people need to pay attention to going forward as they begin to raise interest rates. Forecast into late 2022, more likely into 2023. And what will that do? That's certainly going to have an impact on some different types of asset classes that we'll talk about on today's show, buddy.
Well, the hot stock market, inflation, low interest rates, cryptocurrencies, sequence of returns, risk, shifting retirement timelines, taxes, hacking, our cybersecurity, all things that I think we're hearing a lot about. But as we get going in the program, I do want to remind you, ladies and gentlemen, that if you've got questions or concerns about any of these factors or your plan for achieving your financial goals into the future, Chris Mcintire does make the time available to you to get that plan constructed and put together. If you'd like your specific game plan for retirement, pick up the phone and give a call, 800-868-1194. That's 800-868-1194, 800-868-1194, or you can visit online, McIntyreRetirementServices.com, McIntyreRetirementServices.com, or one more time, 800-868-1194. Chris, do you see anything that is unsettling to you in the market right now that has you worried or concerned? We've heard a lot about these meme stocks. Those have kind of blown up. I know that's not something that we can plan on the long term, but are you seeing anything that concerns you with where the market is currently?
What would my biggest concern, Peter, would be the supply chain issue causing, some unanticipated, inflation, if you will. We've got a new administration in play that, has talked about raising taxes, increasing spending, I mean, in an ungodly fashion, if you will, not to get political here, but obviously you know, uh, the increasing of the debt is something that's very alarming, I think, to a lot of us.
Chris, I saw a chart the other day from the Federal Reserve economic data, and it showed that about 20% of all dollars currently in circulation were created in the last 12 months. To me, that was shocking.
That is an incredible amount of money. And, I think a lot of people get conditioned to, well, it's only another trillion. Well, a trillion seconds in time is 11,000 years. So that is a massive amount of money, right? Because, if you sell it right, 1 trillion sounds like a lot less than 900 billion.
But if you look at those, I've seen videos where they quantify that a billion is like 11 years, and then a trillion is like 11,000 years if you count the seconds. Yeah, it's a pretty astronomical, unimaginable amount of money that we're talking about here. And Chris, that debt clock keeps ticking. If you ever want to see, kind of some scary numbers on a board, usdebtclock.org kind of tracks all that. But Chris, I know that in your role there as the advisor, as the planner for McIntyre Retirement Services clients, you try to create a plan that gives people the opportunity to identify opportunities and to get growth, but also protect what's important. And the balance of that is kind of unique and specific to each and every individual client that you have.
Certainly is. And, we might deal with clients that are just flatly conservative by nature. And so for them, we've got to watch the bond market risk. If they start raising interest rates, it's going to depress bond prices. And like happened in 2018, as an example in recent history. So, there we're countering using some real estate holdings there, if you will. I've got clients that are very aggressive type investors, and there we're looking more into the European marketplace, also financials, a couple other individual sectors of the economy, if you will, for some additional growth. Okay. Now, all of those folks have a core type portfolio, if you will, built around their risk tolerance, and then we can add in some satellites. But for you conservative minded folks out here, your bond holdings are going to be subject to some pricing pressures, if you will. Once the interest rates start going up, we would certainly expect to see interest rates go up for, maybe a longer period of time than what we had in 2018. They went up 4 times. We had more negative asset classes in 2018 than any other time in history. And by asset classes, Peter, we mean bonds of all shapes and sizes, stocks, commodities. A lot of things were negative for that year. And then in 2019, they cut interest rates again, which, kind of turned the tide the other direction. But we don't think that when this happens again, the rising interest rates, that it's going to be a more of a sustainable pattern back toward normalization, if you will.
But the Fed has said, Chris, that they intend to target higher inflation rates, an increasing interest rate environment that could put some pressures on the market. And those are 2 additional factors that certainly are hot topics right now. You've already mentioned inflation a few times. How do we need to put this into context in our long-term planning if inflation is a little higher than it has traditionally been?
Yeah, here's a great example for you to put it into perspective. So if interest rates go back up where you can walk into a local bank or even a bond fund and earn 3.5% to 4%, then you've got to question, why are you taking risk on stocks? Okay, because dividends probably aren't 3.5% or 4%. The growth rate where you can get more of a structured or a fixed income. I don't want to use the word guarantee there unless you had a certificate of deposit where you have some guarantees behind it, or a fixed annuity with a guaranteed interest rate. You'll see could see a massive movement of the flow of funds out of stocks into safer investments. So that would be something we would pay very close attention to as they raise interest rates.
Because it's not just you seeing higher interest rates, it's every investor out there. And if we can get those higher interest rates without taking higher risk, why would there not be a move to them?
Yep, absolutely. If you can make 4% on a certificate of deposit, on $1 million, that's $40,000 a year without having to sweat anything.
Well, I know, Chris, in this low interest rate environment that we have been in, finding a reasonable rate of return has been another hot topic. And we've heard people saying, oh, well, interest rates are going to come back, where I'm waiting for them to come back for nearly a decade now. And we're hearing some beginnings of indications, but still, finding reasonable rates of return in a low interest rate environment continues to be a hot topic here, if you will, that is plaguing more conservative savers and investors.
Yeah, it certainly is. And, inflation eats away your purchasing power. We still have lots of clients coming in with CDs that are renewing at, historically bad interest rates, and I'm probably being unfair to when I say bad, it's worse than bad, right? Um, and where does that money end up going then to try to keep pace with inflation if bonds aren't a very good alternative, if the banks aren't a very good alternative? And that's where we're using some real estate holdings, using some of the fixed index annuity space to get some potential higher rates of return.
Well, there are alternatives then, Chris, out there that can give people a little bit more growth on their money without taking the excessive risk of swinging all the way to the other end of the spectrum. I think that's what people believe in their minds they have to do. Well, if I want to get better than the 0.01% at the bank, then I've got to take the risk of the stock market. There are plenty of options and alternatives in the middle there.
Yeah, you're absolutely right. And it's not one or the other, again, a collective balance. And, I've got a very conservative minded client who's, in his mid 50s and just incredibly conservative. And, it takes time to educate them on, you know, understanding, look, money for the long run, can handle some more risk because over the course of time, history shows us that stocks outperform inflation, and again, breaking it into buckets. So I've got a long-term bucket, a mid-term bucket, and a short-term bucket. And then you can use different asset classes within those buckets based off risk tolerance and then liquidity needs and trying to, minimize fees and things along those lines as well. Tax-friendly investments also, Peter.
Well, again, if you need help in figuring out what investment or savings options is right for you and your planning and your financial progress, first you need to get that plan put together. And that's what Chris Mcintire will help you do. If you already have a current plan, help you make sure that things are working correctly and efficiently and that you've optimized your plan, that it is complete. You have left no stone unturned, no hole that you need to address still in the plan. Chris Mcintire offers to help you structure and put together that game plan for retirement. No cost, no obligation. If you are a listener to the program or a viewer of the podcast, all you need to do is pick up the phone and give a call. 800-868-1194. That's 800-868-1194. 800-868-1194. Chris, I don't know how much you're hearing about them, but certainly a hot topic kind of in the financial world that we are hearing about. We're seeing more and more discussion of cryptocurrencies. In your opinion and in your planning, is there a place for this? Is this something that's still a little too new, or is it now got a track record where this is something that we could, even traditional investors, kind of include as a piece of our portfolio?
It's certainly gaining a lot of momentum out there, Peter. And, especially with the younger generation, the millennials and whatnot, and social media can really help drive the price of these types of Bitcoin, Dogecoin, even some of the GameStop stocks, things along those lines. And I mean, just highly, highly volatile. And you could say a way to for like our listeners that are probably closer to retirement than somebody listening to a rock and roll station right now, right? That's a fair statement. Uh, a way to play, you know, uh, Bitcoin and digital types currencies is to find a mutual fund or an exchange traded fund, an ETF that is centered around that type of technology or the companies that support it. So, we have some of those ETFs available, but again, you have to understand that, look, this is something that's highly volatile. So don't over concentrate. If you've got some, what we call a mad money account, right? Your wife gets mad when you lose money in that account. We all have one of those, don't we, Peter?
Yeah, but I mean that's where we kind of play with those meme stocks. Another thing that we're hearing a lot about, Chris. But this is for the day traders. The get rich quick strategies. It has to be the money that you are willing to lose, because while we heard about a lot of people making a lot of money, I think, Chris, just as much money was lost with those, and a lot of people jumped in as they're hearing about these big gains in cryptocurrencies or meme stocks, and they ended up riding the wave back down.
Certainly, and the cannabis stocks or the marijuana type stocks have been incredibly volatile as more and more states have legalized it, except the federal government has not legalized it yet. So, troubles with the banking system for those marijuana type companies has led to a lot of volatility there. And again, these are some emerging sectors of the economy that are probably going to be very significant in the future, but you just have to be able to ride that wave out and understand, you know, day trading and getting in and out quickly is not a strategy for those that are, nearing their retirement. Not to say that you can't have a little bit of a mad money account or something like that, but that is certainly not worth risking what you have taken a lifetime to create. Not
Well,
in my opinion.
speaking of riding waves up and down, Chris, a term that maybe is not as much of a hot topic as it should be, something that we are starting to hear a little bit more about, and people are becoming educated on what this is, but it has to do with riding those waves up and down: sequence of returns risk. This is kind of a newer terminology in the financial world, but it's something that we took advantage of when we were working, and yet when we turn the corner and we are in retirement becomes a very important risk to address in our planning.
Yeah, Peter, thank you for bringing that up. So, the sequence of return risk is very good in your younger years because you're putting money into the market. And when the market goes down and you're buying, just for example, IBM stock and it fell 25% and you're still putting $200 a month into it. Well, when it's down 25%, you get to buy more shares with it. Okay.
That's dollar cost averaging. That's where we take advantage of
That's
this
where we
power.
take advantage of the sequence of returns risk. In retirement, when you're pulling money out of your nest egg, the last thing you want to have happen is, your investment portfolio to lose 15, 20, 25% early on in retirement as you're pulling money out of it. Because if you're pulling 4 or 5 or 6% out, and the market goes down 20%, well, right? You pulled out another 6%. So the market you pulled out lost 26%, for example. And that can really have a big impact. And you and I have had slides and handouts that we use at our education events where we really highlight this sequence of returns risk. And that's why it's so vital to have an alternative strategy where, my portfolio isn't just stocks, bonds, and mutual funds and ETFs. I truly have some other alternative strategies in case strategy A, or if you want to call it strategy B, some folks are conservative, so their safe money is strategy A. You have an alternative in place to be able to, again, ride the waves, if you will.
Chris, if we are within the window of retirement, transitioning into retirement, or even already retired, and we have not heard this terminology, if our plan does not specifically address, if we have not discussed the sequence of returns risk, are we missing out on a component of the plan that could be vital to our long-term security, stability, and quality of life?
Yeah, absolutely, buddy. You are missing an unbelievable opportunity to say, look, I'm at halftime. I'm at retirement. I've got this wonderful nest egg. I've benefited greatly from some remarkable years in the stock market. And why not at that time carve some of those gains off to be able to use for a rainy day, to ride out a storm? And most of you need to realize that what we've gone through in 2008 and what we went through in 2020, for example, were really short-term blips. The federal government came in and really lended a lifeline. We haven't had that big recession like in 2000, 2001, 2002, where the sequence of returns could have had a very devastating impact on your retirement. So don't think the Federal Reserve's always going to ride in and save everything. We had some, huge crises that, thankfully they did come in, and, unfortunately they dug the debt hole a lot deeper without coming up with ways to, to fix the problem that they're creating as well.
Well, that brings up another hot topic right now, Chris. I mean, we saw the Great Recession, and then the response to that was several rounds of quantitative easing. That was basically creating new money and pumping it into the economy. We saw COVID, and the response to that was several rounds of stimulus, which created new money and pumped it into the economy. Sooner or later, we have to pay the bill for all that, or at least it would seem. There is modern monetary theory, which states that they can just keep printing money and it doesn't matter. But right now we're hearing about the beginnings of, well, how do we pay for everything? And that is the discussion of taxes going up into the future. It's more than just talk and discussion. Chris, at some point in time, we know taxes are going to go up, and it's going to affect more than just the 1%, the rich, those making more than $400,000 a year. What does the Northwestern Ohio saver investor that wants to prepare for this need to do or think about as we are talking about taxes into the future?
Yep. And having some sort of tax strategy in place, which could be, Roth IRA conversions and moving money from those traditional taxable IRA accounts into tax-free Roth IRA accounts. And also, cash value of life insurance is a very tax-friendly vehicle as well, something I use personally. What we use for higher net worth individuals that don't have the ability to do certain things with Roth IRAs and whatnot that others might. But understanding what your tax situation is, what is your tax situation going to be at age 72 when those required minimum distributions kick in? And all of a sudden money is coming out of IRAs that cannot be converted into Roth IRAs. So, which could drive your Medicare premiums up higher as well. So understanding all these little loopholes that are in retirement, and there are many tax loopholes in retirement, or potholes, if you want to call it that. And, you need to find the loopholes that help you exploit and take advantage of, the tax situation that you're currently in. And, when a low income tax rate environment like we have now, a low capital gains tax rate environment like we have now, using donor advised funds, just a number of different tools that are out there, but you have to know somebody that knows how to use these tools, not somebody that just says, hey, bring your money to us so that we can get paid, the old corporate business model of the big investment banks or the big investment platforms. That's why we're independent, so we can utilize strategies and make win-win situations over the course of time, and not just gather money for the sake of gathering assets.
Well, if you would like to have those conversations about not only how to manage the assets, but how to manage the taxes as well and be efficient and keep as much of your money as possible, pick up the phone, give McIntyre Retirement Services and Chris Mcintire a call, 800-868-1194. That's 800-868-1194, 800-868-1194. Structure that plan, your game plan for retirement, a snapshot of where you are currently, and an analysis of the risks that you're taking, the fees that you're paying, the taxes that you may be liable for, a discussion of the goals that you have into the future, and then recommendations from an experienced, qualified professional on how you can place and structure your money and your assets to help you achieve those goals with confidence. 800-868-1194, or visit online, McIntyreRetirementServices.com. So, Chris, is that a conversation that you're hearing a lot about and having with a lot of savers and investors right now about how to take advantage of the current tax environment and maybe be more efficient into the future?
Oh, absolutely, Peter. And I'm kind of a tax geek, and dealing with the right clients that know that they need to do something sooner rather than later. Not everybody has saved enough money where they need to worry about moving money from IRAs into Roth IRAs. You have to think about your children's situation as well, because they're going to be the benefactors of your efforts. And if you've got children that are in high income tax brackets, and why would you want to give them more taxable money when they're in a high income tax bracket? So you have to have the ability to think, over the long haul here. IRAs have to be distributed within 10 years to non-spouse beneficiaries now. They can't spread them out over 20 and 30 years anymore. So, there's a huge tax legislation change that went into effect with the Secure Act, buddy.
And they're sort of talking about Secure Act round two, and we don't yet know exactly what that will hold. But there's a couple provisions that were beneficial to some, but there were a lot of things, Chris, like the end of that stretch IRA, that were not as beneficial to many out there, and probably means that the IRS is going to be collecting more of a tax windfall. Speaking of which, Chris, I've heard a lot of concern about this estate tax. And while currently levels for the wealth that you need to have before you experience estate tax is pretty high, but they're talking about dropping that considerably. I think that more importantly, what a lot of people need to realize is that before you get to the estate tax level, if you've got IRAs or 401ks or tax deferred assets, you've got income tax to deal with regardless before you even begin to talk about estate tax.
Peter, you are absolutely right. And if you want to think of it as, you have to think like a politician. A politician that wants to spend a lot of money first has to get it from someone to be able to do that. So, free college may sound good if you're 22 years old. Okay. If you're 52 years old, you know that they're going to come after your money to give it to them for free college, just as an example, or free health care. Nothing is free. And for them to give something out, they have to come up with ways to, again, take it from those that have it. So, we're probably going to get a couple of emails or phone calls on the political discussion here, but, that's the reality of it all. If I'm a politician and I want to give away everything, I first have to take it from someone before I can do that.
Well, again, if you would like to plan strategically to be more efficient with your money, to keep more of it, to address potential changes in tax laws into the future now, while we know what tax rates and tax laws are currently, pick up the phone, give Chris Mcintire a call, 800-868-1194. That's 800-868-1194. Chris, another hot topic that we're hearing a lot about, and I think due to COVID, maybe more now than ever before, is people have really kind of stepped back, reevaluated life, or had some circumstances that shifted on them kind of outside of their own control that has changed the retirement timeline for many. Either they're thinking, hey, I don't want to spend my whole life working, and thinking about retiring earlier than they would have before, or because of changes in income and the job situation, maybe saying, I'm going to need to work a few extra years. Are you helping people make those adjustments if things have gotten a little off track, or if we want to change our destination?
Yeah, no question about it, Peter. And, a couple of good examples are, depending on the industry people worked, if they were in, crowded environments, they want to get out of that. If they were able to work from home, hey, it's a new beginning. And you can certainly, it's a different feel when you get to work from home. I took advantage of that as well. And, in 2020, I worked from home more often. We were more efficient. We had more appointments. It worked out very well for us. I've got clients that worked in industries such as Church and Dwight, Ball Corporation, that are here local in Northwest Ohio. And those company stocks did incredibly well in 2020. And so, God, they ended up being able to retire because of that.
Well, again, if your timeline has shifted, or if you want to make sure you've got a plan that will provide you the ability to retire and achieve those financial goals on your timeline, pick up the phone, give Chris Mcintire a call. He will help you review and analyze your current situation, help you make well thought through and informed decisions with the sources of income that you will have in retirement, when, how to claim and collect Social Security, go through an optimization strategy for that, how to fill the rest of the income gaps with your personal assets, what order of operations to tap into different accounts, your investment investment accounts, your 401ks, your IRAs, your Roth IRAs. What is the order that you should be taking that in to be as efficient as possible? All of these things are detailed within the game plan for retirement plan that Chris will create, specifically customized to your situation. 800-868-1194, the number to call. That's 800-868-1194, 800-868-1194. Chris, finally, what about cybersecurity here? Another hot topic. We heard about the Colonial Oil Pipeline, some meat industries, but maybe you and I and every individual listening has concern about that, yes, but also should have concern for our own individual cybersecurity in this ever increasingly digital world we're in.
Peter, we get more inquiries into, how secure are the networks that we use, our access to investment portfolios and so on. Very justifiable. And, I'm concerned about, God, next time I get on an airplane, are they going to shut down the air traffic control system, which is incredibly outdated. So I think that's a very valid concern. I think our next battlefronts are going to be in the internet space, if you will, versus, the front lines, the Maginot Line in France, for example, or, trench warfare of World War I. Now we're going to be fighting warfare, virtually online, and it's happening right now. And I'm sure it's been happening for quite some time. But, like you say, a couple of lights going off here is certainly going to throw a big wrench in things. And I think we are all very, very concerned with the infrastructure that makes, the air conditioning turn on, the lights turn on, somebody was to get in there and hack. And that would be something that, it's going to be a new way of life. And it's certainly something that could upset the apple cart. One of those geopolitical pieces there that's hard to predict. It can happen quickly. And depending on how long it takes to get it rectified, on just how volatile it makes the stock market and our 401ks.
Well, on this program, we've addressed many of the hot topics that people are hearing about in discussions around the dinner table, on the news, maybe around the water cooler at work if we're back to being in the office. But if you've got more knowledge and understanding of your situation and your own personal planning strategies, you can filter through all these hot topics and make better decisions for yourself with your money. That's why we always try to tackle the big topics here on the program. And if you've got questions or concerns, if you'd like to create that customized individual game plan for retirement, or just review your current plans, your assets, your accounts to make sure that you are doing the right thing for yourself, pick up the phone, give Chris Mcintire a call, 800-868-1194. That's 800-868-1194, 800-868-1194. Chris, we always appreciate your guidance here on the program, the time that you spend with us and the listeners across Northwestern Ohio. Thank you for being a resource to savers and investors who want to have a plan to achieve their goals.
Absolutely my pleasure, Peter. Everybody be safe out there. Thank you for listening and have a great weekend.
Visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris Mcintire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Indexed or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract.